All right. See who all jumping in on chill. Just wait for it. All right. It is that time. We'll go ahead and get it started. Get some music going in the background. Let's like vibing out at the same time. We'll just play it and turn it down some. Yeah. This is what we gonna do today. Today we'll go over. We'll do some more charting. Um, we're gonna go over trade plan. And the first thing I have in my trade plan is charting. So when I say charting, I'm talking about having visual aids on my charts that's going to help me pick and choose high probability areas to take my trades. With this, we're going to go over support and resistance with horizontal lines and the rectangle tools. And we're going to go over trend lines, the diagonal support and resistance. So we'll jump into that. Right now, I got the chart is the peso yen chart is up. I got the 3-day time frame up. And the easiest and the simplest way I can show you how to identify support and resistance is using the line chart. Now, the line chart is going to be the close of price. That's it. So where you see all those peaks and those valleys, peaks, valleys, points, sharp points and turns, those are all where price has closed and turned around. Price does this on every time frame, the daily, the weekly, the monthly, 4 hour, the 1 hour, all the way down to the 1 minute. You want to see these peaks. So since we're on trading view, we just go over and we grab the horizontal tool. You can use horizontal ray or the horizontal line. It doesn't really matter. You select the tool. Hold on. There we go. So boom. What I do is I start from the left. We got this high here. We got this low here. Then price pullbacks up there, right? Anything in between here, that's just a range. Anything in between here, that's just a range. When price breaks it, and we create a low that we can see. Remember, marking these up is still objective or subjective, one of those words. But whatever you see is what you see. That's how trading works. You can see something completely different from what I see. All right. And we're just gonna keep marking it up. Boom, boom. We don't need to mark this one up because price already been there. We break down here, we pull back, it's still pretty close within range. If my pointer, the mouse can fit within the distance of the zone, that's considered part of that same zone. Remember, these horizontal lines are not exact price points. They are zones, ranges, right? Then we get a significant low, a significant break, creating that lower low. We pull back up into previous structure. When we create that next significant low, got that right there, all the way back, all the way back. All right. See, we don't really have to mark up that much right now. And then as we come closer to where we are right now, we got this significant low here. All right. And remember, we're marking this up on a 3-day time frame. and then I go back to the candlestick chart, right? Boom. And that's the zones we have on a 3-day time frame, right? That's how we use the horizontal tool to mark up our support and resistance zones. What's important about support and resistance zone is that as you look left, right, this price, this is where price is currently right now. But when we look left, right, that tells us where price has already been. So it's going to be just as important going into the future. So that's what I love about support and resistance zone, because you see the past that you can use to navigate your future. So you already have the history. Now you can navigate price in the future. They're not going to be exact or anything like that, but you have a better idea, which give you a better probability in taking a trade. All right. So now we're going to break this down, zoom in, right? So we're looking at on a 3-day, and we're going to take it down to the 12-hour, right? All right. So we're looking at the most recent move in current price from March, from February all the way to now. Now we're going to use the rectangle tool to mark out some tight zones, high probability zones where we can take a decent move. All right. So we got this high up here. Let me zoom in some more so you can see what I'm doing. All right. So price is here at what? Like 5.06. The most significant zone next is this structure here, right? We know from February price dropped. We created this low. And then we got this pullback. Right? Price always pulled back into previous structure, support and resistance zone. We broke it and we pulled back into it. I'm going to take the horizontal tool, my rectangle tool, and I'm going to mark up the high and the close of that body as an area, as a probable area that I would like to take a trade, to continue to trade to the downside, right? On the higher time frame. We plan to move on the higher time frame. All right. That's one area. That is the highest entry, right? Buy high, sell high and buy low, right? That's the area where we can sell at. Chill out, Angela. The next zone we're gonna look at is this, the price broke below the support and resistance that we made this low, right? That's another area. This is a zone of support and resistance. That's the most. This is a small time frame area of support and resistance that price broke, right? If you have any questions, type them in the comment for me. That's the most recent area of structure that price broke on the peso yen. All right. And to show you what I'm talking about, if we go back to the line chart, you'll see that would be an area, right? Where we broke, where we put the horizontal line. Go back. Close to where price is right now, right? If we look back to the left, we have a decent range. The price didn't create any higher highs or new lows, right? So we have a range. And the most area that range the price broke before we make that move up is right here. We use the rectangle to show you. We got this high. Right here. The small range. This is the most recent resistance area that we just broke, right? From that low that we created on the 3-day time frame, right? And that's just pretty much how we use the horizontal and the rectangle tool to create support and resistance, right? It is areas of high probability where we can use to take trades. Now, how do we make this increase that? How do we increase the probability on these trades? Is we can use another tool. Let's see if I can dial up the trend. All right, we're back on the 3-day. We already have our support and resistance marked up with our horizontal lines, right? The next tool we're going to use is the trend line tool, all right? Now, with the trend line, we always start with the most recent high that you're looking at, that you're going to start with, right? So we got this high from here, and then we're going to drag it to the current price, current most recent high that you saw. That's going to be right here. And we don't want to pull it through the body. We only want to pull it through the wicks, at the top of the wicks or through the wicks, but not the body, right? That's the diagonal trend line tool. The key with the diagonal trend line tool is you want to, as price is moving in real time, you want to adjust it to connect the higher lows or the higher highs. So we got this high here where we started at. We created this low. We have a higher low. We have a lower low. We have a lower high. We have a lower low, right? We have this lower high, lower low, lower high, lower low, same high, but still it's a lower high. We got this lower low. So let me do this. So in real time, this is what that chart would look like back then. We would have connected through here and would have ran it like this, right? Let me see if I can do. Yeah. All right. This is what it would have looked like in real time. All right. We got the high right here. Got the high. Got the low. Lower high. Lower low. Lower high. Lower low. Lower high. Right? So we draw the trend line just like this without cutting through the body. All right? And this is on the 3-day time frame. So if you're watching this on the 3-day time frame, you see areas of high probability where you could have entered and took these trades, right? Here, that would have been a good entry. Drop down, pull back, always pull back to previous support and resistance. We broke through support and resistance again. We pull back, look, support and resistance, trend line, just like that. That would have been in your trend for that week, downtrend. It would have been nice to take all those sell trades, right? Let's see if we can get this thing to play at the fastest speed. All right, let's go press play. All right. All right, then we'll pause it. Boom, right? So we had this, we created this lower high, we created this lower low, and we came back and created the same high, just extended, right? We just adjust the trend line to accommodate, all right? The reason why we would have been able to take this trade, though, even without the trend line, is because it pulled back to previous structure and it showed rejection. And when I say rejection, I'm talking about candles with a long wick and little bodies, right, at support or resistance. And the wick has to be showing force in the direction of the trend. So what that means is we have a wick that push all, that means price came all the way up, and then we close near or below where price open. In a downtrend, that means price closed lower, right? In the uptrend, that means price closed higher and left a wick on the bottom. So, yep. All right, first play. See. All right. See, same high again, right? We broke the trend line, same high again. If you had an order placed here, you would have lost that trade. You would have got stopped out. But that's why we wait for price to give us structure. We wait for price to structure up and give us what we need before we take the trade. All right, and we just adjust the trend line accordingly. Boom. All right, and if you just wait, I don't know what's that. Let's play it. Wait for price to give us what we need. All right. Price broke through it, we pulled back below it. You could have took this trade from support resistance trend line. Would have been a couple pips, a couple hundred pips. Let me see. If you would have got it on the close of the candle, that would have been only 25 pips. Not much. Not much. But we adjust. As price move, we adjust. We adjust with price, right? All right. Now here you see we did all this movement, several months of movement actually. You see price will range in between support and resistance often, and you can take those trades. Let me see. Anybody got a question? And we just adjust this price move, keep going. All right, pull it over, extend it here, using a trend line and support and resistance. All right, let me zoom out real quick. All right, you see how price keeps reacting to this area? What is this? What is it? 6. The peso yen keep reacting to the 6 area, 6.020 area a lot. That is a strong area of resistance, right? So adjust the trend line accordingly. You can see, right? As we adjust the trend line, it's, what is it? I don't know what word I'm looking for, but we adjust the trend line not to fit our needs, but to connect the lower highs. Was it to connect the lower highs on a higher time frame or lower time frame? And you see, excuse me, and you see it generally reacts to areas of horizontal support and resistance. They're just high probability areas. There are other things I teach in the course to know when it's going to react or to increase the probability of the reaction, and it's based on reading the candlesticks. Actually, let me grab the book because give me a second. This book, Japanese Candlestick and Charting Techniques, this will help you learn how to read the candlesticks and choose the ones that increase your probability in trading, because you can trade without learning how to read the candlesticks, but I find that knowing how to read the candlesticks and what they mean is a lot easier and profitable than waiting for an indicator to tell me when to get in a trade. Let me end this real quick. In chart replay mode, but trading is still very subjective, and if you don't take the time to actually learn how to read the charts, understand what the candlestick mean, understand how to use the tools available to you, then all you're doing is gambling. The market is closed on the weekends. I'm looking into doing some live trading throughout the week. But for now, I just wanted to share with you guys how to start building your trading plan with starting with charting and using the visual aids available to you to find areas of probability, high probability. And that's all we got for today. If you haven't gotten access to the group, contact me and I'll send you the info so you can get access to the trading group where we learn together. We share our trade ideas. I post my ideas for the week and access to all that stuff. So that's the education point for now. And I'm gonna go over some of the trades that I have already marked up, and I'm just gonna show you what I'm waiting for, because I mark up my charts on a higher time frame, the daily, 3-day, the weekly, and I wait for price to reach certain areas before I look and start to engage with my trades. That way I'm not trading all the time. I'm not always looking at the charts, and I actually have a life. So yeah. Let's look at what's this? African Rand and Yen, ZAR Yen. Actually, I'm in this trade this week. My partial down. Let me see if I can log in first. Shoot. Log in. We'll zoom in. Go to the daily. Go to 4 hour. All right. So I got in this trade earlier in this week. Let me zoom in. So the main reason for me getting into this trade and really taking this trade is not because it's going to be majorly profitable, but I'm looking to play the long-term game on the interest rates on this one, because it's a positive swap trade, positive swap interest pair. So that means, what that means is, if you take a trade on a certain side of the pair, you will gain interest in addition to whatever profits you have. So I want to play the interest game on this one and show you guys. See, I have this marked up for a little bit, and I've just been waiting. I'm actually waiting for price to hit up here to see if it's going to actually continue up or it's going to turn around. But if it does turn around, I'm going to exit my current trade that I'm in, because I just want to see how long I collect on a positive interest. So I'm just playing it to the upside. And with that, I also want to share that, because trading is subjective, anybody can take a trade in Forex and win. You just have to pick your entries. That's going to be the ideal thing, is picking your entries. Like on here, I played this pennant, let's call it this triangle, this bullish triangle pattern. I played that to my advantage. I played the breakout. So there we go. So I saw the structure here, and I saw price creating higher lows, higher lows, higher low, higher low. But the higher low was already created, so I couldn't get on the pullback of the higher low. So I placed an order, a stop order, a buy stop at this high of this range here, right? At the high of this range. And it triggered on the side of momentum, and I'm still in a trade. About $50 right now from here to here. About $50 left in the trade, but I'm collecting on interest as well. So that's for ZAR Yen. There probably will be more opportunities to get in on this trade, and let me show you why. So we just broke the structure, right? On the 4 hour, this is the highest point on the 4 hour, right? We broke that structure. We haven't retested it yet. Let me pull up the horizontal rate tool. We broke that structure. We haven't retested it yet, right? We made this high. We made this high. We got this little range here. So, boom. We barely retested this structure. There you go. We barely retested in the range, in the zone, barely retested. We continued up. We broke the next high of that range, which is here. When I say break, I'm talking about price pushing above it and closing above it. So that's the next area. And if you notice, we also had an area of major support and resistance, and we're starting to slow down. How do I know we're starting to slow down? On a 4-hour time frame, we tapped it and we pulled back, right? We didn't close below the open, but we closed close enough to the open on a 4-hour time frame, and we have a long wick. Next candle, we open and close in about the same area. The wicks are about equal in size on the top and the bottom. Next candle, we open, it barely moves. That's how you know price is slowing down. The candle will slow down. It'll start giving you wicks. It'll start giving you spinning tops and all that. So then at the end of the day, price candle, price close below the open, leaving us a wick from the support and resistance. So price is slowing down going into the week. I don't know if it's going to gap up. I don't know if it's going to go down. I don't know how price is going to react. But we wait for price to tell us what it's going to do. So that's it for ZAR Yen. Let's see, other pair I'm watching. Actually, revisit dollar yen because we talked about that last week. And what happened? Yeah, last week we talked about dollar yen. I said the price would. I said I wanted to wait for price to make its move upwards from this zone down here before I got into the trade, right? So price broke on that buy. You can watch the last week's video. It's up on YouTube too. If you got in on that buy, I'm glad you did. You made some money. I did not buy because I'm sell biased on dollar yen pair. We got that break, and we actually in the zone where I want to take the trade, but price hasn't given me that signal that it's going to slow down. So what do I do? I'm waiting. I'm just waiting. I'm waiting for price to give me structure. I prefer price to structure up within this zone, but as you can see, we close above it, which to me, that tells me we're going to create structure above it and we're going to continue up. And in that being the case, that's fine. On my sell, I'll just have an even better entry. So next zone I'm looking at is between 110, what is that? 110.7 and 110.9. We'll see if price can hold within that structure, then I will be looking to take an entry there and continue down. Also in that area is another area of support and resistance, or let me go to a higher time frame real quick. Yeah, it's our support and resistance annotated by our rectangle tool, but it's also meeting the trend line on the higher time frame. Right, boom, 3-day. Got the higher time frame as well. So earlier this year and all last year, I've been playing the same trade over and over. I've been playing the sales, waiting for price to hit the top and drop. That's it. How do I know it's a top? I don't. I let price tell me it's a top, right? What tells me that is trend lines, support and resistance, and I use other tools as well to increase that probability. But I wait for price to tell me what's going on. So price is in my zone. We closed above it slightly, right? On a higher time frame, that's a slightly close above. So we're just waiting. I'm just waiting for price to tell me what's up. If we're going to continue up and I can get a better entry on my sell, or we're going to break down right here and we're going to make that move back down. As you can see, we are in the range. So this could be a false break to the upside and we can fall right back down. So I'm going to wait for price to show me what's going to happen next. This is on a 4-hour, right? So to the 40-minute, right? See, on 4-hour, got that on 4-hour. You saw that long wick, and then it closed. Let's go back to it so you see what I'm talking about. See, we got that 2 candles, wick, price close high, and then we got the candle that's falling right after it. All those, that's what you see that fall right there. Boom. So now we just wait We just wait. That's dollar yen. I'm still waiting for the sell. Possibly a setup for another buy for some people, because we on a 40-minute, that's a close. On a 4-hour, it just broke structure. So, and it's pulling back into that structure. So if you're going to buy this, I'll wait for price to create structure above or within this zone, which will create another higher low. And then you can enter on the higher low and take that buy up, or you can enter on the break of the high and take whatever the market gives you. That's for dollar yen. So that's all I'm gonna give you guys today. If you're trying to get, if you need access to the group, hit me up. I'll send you the information on how to get access to the group. And I'm doing personal lessons, one-on-ones via Zoom. I will teach you how to get involved with trading from A to Z, and even take your first trades with you, so you can get that full experience. Trading is risky. I'm not an expert by any means, but I have spent the time to learn the hard way. I learned the hard way how to trade responsibly and profitably. So I'm willing to give out that information. The main reason why I even got involved with trading is because I saw how powerful it can be for an individual to have the ability to create cash on command. In the beginning, I didn't realize how hard it would be to learn it. But that was only because I'm stubborn and I want to do everything my way. So I learned the hard way. After getting mentors, I figured out it's actually pretty simple if you keep it simple. And the other reason I do trading is because it's something it's a skill I want to pass on to my kids and anybody who really want to learn. I mean, I didn't have access to this information. I didn't even know about it until I joined the military. So being able to pass this on and teach people a skill that can create wealth or put someone in a direction of financial freedom, then that is just lit to me. You know what I'm saying? So, but that's all we got for today. Tap in. Do me a favor. I'm gonna upload this video to YouTube, so share it, comment, like, or what have you. All that good jazz. And that's it. Let me go to let me do stop share real quick and go to the chat functions. Let's see what's up. No chats. All right. Cool. And we out.